low. They are very low. So what we're going to cover around now, we're just going to cover up what we discussed so that people can really understand what I was trying to say, because a lot of people were confused.
Okay.
Yeah. So we're going to cover up that for the time being that we have, and then we're going to do for Taku and Terry, we're going to have another session tonight when the network is a bit stable. So once you have like the current markets that we have at the moment, we've got a very strong dollar. You see, dollar index is high, it's bullish. We are way up towards the 100 mark. That means the dollar is bullish. DXY is bullish. But now we've got lower interest rates in the United States between 0 and 0.25. Then when you look at countries like New Zealand, Australia, they've got higher interest rates than the United States. So if you take, for example, another country besides those two that I've mentioned, if you take, for example, maybe say, I think Switzerland, if I'm not mistaken. Let me just open my interest rate page. I think Switzerland also right now at the moment has got high interest rates, which then now Switzerland, they're negative. They've got negative 7.5. Let's see, who can we look at? Bank of England 0.1, South African Reserve Bank 5.25, but our currency is not strong, it's weak. Let's see. Where's the British pound? I'm just trying to see a country that we can use for example that has got higher interest rates than the United States. That's what I'm just hunting around for, especially towards the right. There we go. So if you look at the Bank of England, Bank of England has got rates sitting at 0.1. Can you hear me, guys?
Yes.
Yeah.
Bank of England has got rates sitting at 0.1%. And this change was done, when was it? March 19. That's when they cut 15 basis points to 0.1. So if we are to look at the time period which they cut the rates, so March 10, that's basically second week of March, right? Which is here. We're looking at the price action of last month candle, right? Remember, dollar is bullish. Take note, dollar is bullish. So we are focusing on the last month price action on, let me just highlight that area on GBP USD. We are focusing on that range there, that big bearish candle, the one with a long wick. So if they cut their rates on March 19, right, and then Federal Reserve, I remember it was a Monday early morning when they cut to 0%. I think it was March 15, if I'm not mistaken. They cut with 100 basis points. That was a huge cut, meaning the American dollar was just literally weak. Yet, dollar index, look at the March price action. So we got the high coming up in here, and we've got the low down there. So we had a very strong bullish dollar in as high as 103.8. Terry, I'm just gonna mute you. There's a kid in the background. So now, looking at those figures, British pound, Bank of England rates 0.10, United States Federal Reserve, they cut their interest rates to 0.0%. Now, with a bullish dollar, look how bearish was British pound. Remember, a bullish dollar, you sell weaker currency against the stronger currency. You see? So for British pound against the dollar, you'd have been selling what? GBP USD. You'll be looking for shorts. So now let's go to a weekly time frame. Now I need to highlight, let me go straight to a daily, then we can highlight March. Can you see the price action for British pound against the dollar in March? It's exactly almost the same as NZUSD and AUDUSD. Can you see that price action?
Yeah.
It's exactly the same. Now, if you look at the dates, right, where's 19? Where's 19? 19 is somewhere down. Right, this is 19. So let me mark that area. So it's this price action here. Right, I'm just gonna put right, so that's the price action that we need to focus it. Now I'm gonna go straight to a daily, to an H4 time frame. But if you look at what happened in the whole of March, right, you can see that there was a huge sell-off. Yes, prior to the rates decision, you'd have seen that there was a huge sell-off, right? And even ahead of the decision, like when they announced that, okay, our rates are now 10%, you can see there was a sell-off, 356 pips. There was a huge sell-off. But now remember, we don't trade the news, right? After that, yes, you can trade the news if the numbers come out while you're looking at it, and then you'll be like, oh no, okay, dollar index is bullish, but the Federal Reserve, they've cut their rates to 0%. Bank of England still has higher rates than the United States, but there's no much difference. I'm sure you can see 0% and 0.10%. There isn't much difference. That's why probably we had this whole correction here. The same thing happened on AUDUSD and NZUSD. There was a correction to the upside because the rates are almost the same. You see, 0% and 0.10% doesn't make much of a difference though. But on shorter time frames, now when you're getting into trading, when you're opening your trades on shorter time frame, it's gonna give you what can I say? It will give you more confidence that okay, we are going to push to the downside, testing our higher time frame demand zones. Because if you look at this area here, this is a higher time frame demand zone on a monthly chart. The dollar 14, 1.14, 1.140 on British pound. That's a higher time frame demand area. So you'd have only waited for the rates to be released, the number to be released, and then you take a position. Now you see these spikes here. Obviously, these are stop hands. And if you go into another lower time frame, say we go to we're now on H4. If we go to a H1, right? Let me just zoom out a bit. You can see where price went back. There's a base here on lower time frame. This candle here. Where am I? See here, price was dropping. There's a base here on lower time frame at this area. Then price dropped again. Then it retested. This would have been where you take your short trades. And if you look at that time when this retest happened, it's probably towards 6-8 in the afternoon. Okay, 1400. So this is where, yeah, 6-8. This is where the British pound, the Bank of England, normally release their figure for the interest rates. You can see what happened. My market sold off like 345 pips, you see, for the next 3 days. You see, from 20 up to the 23rd, market was in a sell-off. Yes, it might look like it's a short move to the downside, but it's a trade which anyone can take with the confidence that it's gonna pan out. You see, a trade that you
Yeah.
enter up here. You see the base I was talking about. Now I'm on a 30-minute chart. There's the last up candle. There's another base. There's another base. Market retested them here, then dropped, closed back below your what? Your supply zone, and then market tumbled. So this is a trade that you can take without any issues. You'll be like, no. If it goes to the upside, then you know you're definitely wrong. But there you can see how many five, okay, yeah, 5 30-minute candles. 5 30-minute candles, that's what? That's about 3 hours. Market tumbled 230 pips.
Yeah.
So all this comes from you having done your analysis to say, okay, no, right now, interest rates for America, they are lower than British pound, but yet we've got a strong DXY, we've got a strong dollar. So shorts would have been your idea because you're selling a weaker currency against a stronger currency. Same thing applied on New Zealand dollar against the US dollar, the Kiwi. You can see what happened in March. We had a bearish March. Weekly order flow was bearish, meaning you are looking for short trades. And up to now, the New Zealand dollar and the Australian dollar market is bearish. Yes, there has been a retracement in April, but right now market is bearish. If you look at how much the closing price of March on New Zealand dollar and Australian dollar, you can see that they cleared up the demand. The demand has been cleared to the downside, meaning there's still possibilities for market to keep on tumbling. You see? So everything now comes into play. Remember, we are anticipating a weak dollar, which is highly likely. Dollar index is gonna push to the downside. Where's my dollar index? Dollar index is gonna push to the downside all the way to 97.18. That's where I'm expecting dollar index to push. You see? So a weaker dollar index, and already you can see USD, the Q, it has cleared up this area here. This is a monthly chart, right?
Yeah.
This area has been cleared. So a retest probably of these lows, you see here, that and that, a retest of those lows, then you can expect market to continue with its downtrend. Same applies with, let me go to AUD USD. Same applies with AUD USD. Let me just zoom out a bit. Okay, I need to zoom in. Market is bearish. You can see how much closed. Much closed way, way below. Forget the wicks. Okay, let me go to a line chart. Look at the line chart. You see here, this was our strong demand level where we expected price to bounce. But you can see already the low of March has closed way, way below. Now, if I switch back to the candlestick, focus on the lines that I've drawn. You see that those lines, they're exactly almost to the peak of the closing price. Look, you see, that's why you must always consider the closing or the opening price. You see, so right now for Australian dollar, it has already retraced to a level which has been broken. You see, so if I'm to trade Australian dollar right now, I'll be looking for short trades. You see? Do you get my point?
Yeah.
Boss Moja, are we together?
Yes, boss.
Are we together?
We are together, sir.
Yeah. So
We are together, sir.
right now you can see that already Australian dollar has retraced to a zone which was broken, which was engulfed. You see, a demand zone that has been engulfed. This area here, it was engulfed by March.
Bearish candle.
Yeah. So already there's been a retracement to that area. So if we are to go to a lower time frame, now that notion again of saying a strong dollar, weaker United States currency, and a strong Australian dollar, it supports that scenario. You see, Australian dollar has got higher interest rates currency. United States has got lower interest rates currency, interest rates, and then dollar index is bullish. Right? So in that level there, if we go to a lower time frame, you see how it supports. Let me just clear up how it supports shorts from that level. Let me just clear up here and default. Let's go to daily time frame. Then zoom out a bit. You can see the level that we are reaching now. Right. Once you get to a daily time frame, that's where you have to be more precise. You can see the level that we might expect. You see here, this level now. That's the level that you have to expect price to reach before you start hunting for.
Come down.
Yeah. Before you start hunting for short trades, because this is the level which was flipped, which was engulfed. You see, price broke and closed below. Now there's a retracement. So if you are to take a trade on AUDUSD, short trades is ideal, but now your stop loss has to be above this high. See this high? That's where your stop loss is supposed to be. You see? Because definitely market is gonna go to the downside. Mark my words. Australian dollar, New Zealand dollar, market is gonna be bearish. It might even open bearish tonight, but there's gonna be less liquidity now in the market because
Holiday.
yeah, because of the holiday. So there won't be much liquidity. Let's see. Okay, this thing is telling me I've got 10 minutes left. So that's what I just wanted to emphasize furthermore in regards to a bullish dollar, weaker interest rates in America, which then comes down to a weaker dollar, and then higher interest rates in major countries. Look at it from a major country perspective, a major pair, you see, one which is also in the dollar index basket. That's what you must always focus on. Remember, the moment you do your analysis on that, then decision to trade other pairs becomes much easier. You see, because the moment you are like shorting NZD, USD, AUD, USD, what are you gonna be doing on USD CHF, USD CAD? You see, so you need to balance the two, which becomes easier once you have done that whole analysis. So now we've got 10 minutes left here. Any questions, guys?
So far, so
good. Matlod.
You start, George.
So there
So
is the interest
I
rate.
wanted to
Yeah.
USD card. Isn't it more like related to USD?
What do you mean?
I mean, say they pay USD card. Isn't it they go like their regulation is based on the USD performance, USD index,
You see now,
Canadian dollar.
you see the thing with the Canadian dollar, you need to be very clever in the way you trade the USD CAD. The reason being, the Canadian economy itself is mainly backed by gold and oil, especially oil. You see?
Yeah.
Oil contributes like, I think, a whole almost 15-20% to the Canadian economy.
Okay.
So you need to put that into perspective to say, okay, right now oil is struggling. So basically, the Canadian dollar also is going to take a hit, irrespective of this scenario that we have discussed of the interest rates. I'm not sure what is the interest rate for Canada right now. I don't know what it is. But you need to put that into perspective, like, okay, what's the rates for Canada? Where is oil trading at? And if you look at oil right now, oil is facing a whole lot of challenges. There's dispute between Aramco and Russia, Saudi Arabia and Russia. And then you also have Trump, and demand is less. There's no demand for oil right now, to a point whereby those guys who are the suppliers of oil, they are keeping on supplying, and those who want oil, they're saying, no, we don't have anywhere to put it. You see?
Yeah.
It has come to that in regards to oil. So it's things that you have to consider. That's why at times you get USD CAD, it will move in its own direction, but eventually it will catch up with dollar index. You see? Yeah. That's why we have to close that position, because the level that it's at right now, the Canadian dollar, it might push to the upside back to 4,200, 14200, the Canadian dollar.
Yeah.
Yeah. So that whole interest rates thing, guys, make sure you understand it. It's a thing that you can do by yourself at your own free time once in a while. You see, like mainly like monthly, or when they release the rates. You see, because normally they release the rates towards it's almost the same time. So you must just put that into your diary to say, okay, interest rates, we must know what's happening. Don't go blind into the market. You see?
Yeah.
Moja, any questions?
No, sir, I'm still trying to digest this thing of interest rates. It's a whole new dimension altogether. But yeah, we'll get there.
Yeah,
It
this one needs some time, because the moment we're done with the interest rate section, like how they do affect the market, there's another aspect that I have to introduce to you guys. It's called the commitment of traders. That one is much powerful now, but it's something that has to come after knowing what the interest rates do. Commitment of traders, every broker, every institution, remember, they report to the FCA or CFTC or the New York Mercantile Exchange. They report the positions that they are holding, whether they are long or short on gold. They submit a report every Tuesday. You see, there's a lot, guys, that you have to know. So that report in itself, it tells us like what positions are the institutions holding. You see?
Yeah.
Yeah. So
is it available to us?
Yeah, it's available. Let me see. Can you see my browser? Let me see. What am I sharing? Let me share my browser and then show you quickly. New share. Where's the browser? Can you see the browser?
Yeah. No, investing.com. Yeah.
Yeah. There's you just go to Google. Go to Google, then you go to FTC. CFTC, that's Chicago Futures Trading Commission. These are the big guys. When we say market is manipulated, this is where everything comes from. So, for instance, let me see, I've got 3 minutes left. Let me just give you a short intro. I've got 3 minutes left. If time cuts out, you must just rejoin. Oh, but people are going to struggle to rejoin. You must just rejoin. So, the CFTC, what they do is they're a regulatory board. You see? They regulate the brokers, the institution, whoever is involved in trading, whether it's stocks or anything, commodities. So, for instance, FX Pro, they report to FCA, that's the Futures Commission of, I think it's Europe, if I'm not mistaken, because they are based in Europe, right? But all those guys now, they will submit that report to the Commodity Futures Trading Commission. These guys are in Chicago. So every Tuesday, a report is submitted and published online, but it's only published for us. It's only published Saturday after 9 p.m.
Oh, is that the court report?
Yeah, that's the court report. CFTC, that's the court report. So many people, they don't know about the court report. What it does is it gives you an insight. Say, for example, right now, if you go to the first website, the cftc.gov, that's the one you open. When you open that website, there's a whole lot of stuff, right? But the only one you should be interested with is the one you go to market data and economic analysis. You go to the one that says commitment of
Economic analysis.
Yeah. You go to the one that says commitment of traders. When you get there, you scroll down, right? We are here on the futures market. That's where we are interested in. Forget about the petroleum, the agriculture, natural gas, and whatever. Forget about metals. Yeah. For us, currency traders, we are interested here with the Chicago Mercantile Exchange. That's for our currencies. Then for gold, we are here on the Commodity Exchange. That's for gold. For oil, we are here at New York Mercantile Exchange. Now, the moment you click, say, Chicago Mercantile Exchange, just choose the short format, right? Now we're going to see all the data coming out, right? This is a whole lot industry now, Moja. This might even confuse you more than interest rates.
Of course.
Now, when the report comes out, you can see